Okay, I think we can start. Everybody else, I guess, will catch us along the way. Are we good? Are we good, traders?
Yes, we're good. Thank you. We're good.
Seems like it's
Good,
only
good,
you who's good.
Good, Mr. Lebza.
Oh, there we go. There we go. There we go. Thank you. Thank you. Thank you. As usual, let's start with questions or comments, if any. Questions or comments, if any. Excuse me. No comments, no questions.
Mr. Lebza, I want to make a submission here in terms of what you have said this past few days in terms of the risk of, in terms of gold. You said the USD is going to gain strength. This is the season for that, right?
Just repeat that. What's going to be strong?
Gold. No. You said
Yeah.
the USD actually.
This is not quite. Risk on. Okay. Risk on is when the dollar is selling. Gold is, yeah. You just got them vice versa.
I mean, you said this season. Yeah, I maybe I did not get it well, but you said this season. Yes, you said yes.
So,
did you say this season between from September or something?
September.
It has been happening for over years now. Yes.
September. Yes, September. Definitely, we tend to. There's a tendency for being risk off. So, in other words, the dollar being strong and gold a little weaker. But now things have changed a little. We've had the biggest event, arguably for the year, that took place yesterday, which changes the narrative a bit. What happened yesterday? Anybody?
Interest rate cut.
Interest rate cut. When was the last time we got an interest rate cut out of the US? From the central bank?
4 years ago.
4 years ago. Right? It's quite significant. It's a different monetary policy altogether. And it's I'm itching to just jump straight into that, but I can't, right? We need to get for our program, but it will make sense soon, as we really delve into monetary policy. Excuse me. So yeah, yesterday we had those interest rate cuts. It really changes the narrative. In other words, what we should see now in the medium to long term, and I won't go too far anyway. Let's say for the last quarter of the year, we definitely would be risk on. In other words, a weak dollar, gold strong, the stock indices also will be bullish. So that's the outcome that's what we expect the market. That's how we expect the markets to play out in the last quarter of the year, right? What I had said about September is that we tend to, coming out of what tends to be a risk on season, which is June, July, August, we tend to be bullish, right? We tend to have that risk on sentiment. So stock indices bullish, gold bullish. We tend to go for those riskier currencies. GBP USD we buy, Euro USD we buy. And now as summer holidays end and we get into September, those positions gets consolidated. The market looks for fair value. So that tends to be a bearish month, right? For the stock indices, and a strong or bullish month for the dollar, right? So that picture has been a little bit distorted, right? We have lost what we have seen over the years as I would say, a 20-year average. That's what you would see. Even when you Google on this, you'll see that definitely September tends to be a risk off month. So it's not gonna be like that, I guess, every year, but most years. So I've always observed that tendency, and we work with a quite a sizable sample, 20 years. So the average for 20 years, I think it's big enough, because that's what you know, if you use a small sample, it may be a bit misleading to say, oh, in the last 5 years, September tends to be risk off, but we've gone 20 years and we still see the same thing as an average. So just a little different this time around because of those interest rate decisions that were made last night, South African time. So yeah. Any other question?
Yeah, I think, like you said, that gold is on, it's gone higher than it has ever done. I just found it a little bit difficult to trade it because it's on that territory that you uncharted territory. I just was grappling with, how do we trade it now? Do we just use the normal price action without, because there's no history now to refer to?
Yeah.
I was just a bit
Yeah.
difficult here.
Yeah. No, still very much tradable. How you're going to do it is, yes, you know, it makes us a little uncomfortable, you know, trading in uncharted territory, but we can still advance in that. You have to work with psychological price points, right? So the high on gold is what? Did we get to 2600 yesterday? Let's just check quickly. XAU USD. I don't think we got to 2600. That is a key psychological price point. What are psychological price points? You may ask. This is prices usually ending with a round number, right? So 2600, 2650 would be our next level. 2700. So you know, we'll take it in those halves. Those are psychological price points. Okay. You can see the market, you know, hasn't reached our point yet, our fair value place. Likely going into those 20. What is this? Why did it change? Hold on. Let me try get it to look normal here. Regular. Right. So we're sitting at what? 2591. We are what, nine pips away from 2600. That's exactly where we got it last night. Right. There's a probability we're just gonna test it ever one more time, and we might come back all the way down here, right, to 2530s, which we marked out. We might come all the way down here, look for fair value, and then commit to pushing price even higher, or we might just simply violate close above. But then, as usual, what you're expecting to happen here as role reversal, you must expect it here as well. So expect price to go up, come back down, roll reversal, then you target 26. What price would you be targeting? You forgot. I just said it. 2650.
2650. Yeah.
Has it been a long day, guys? It's Friday Eve. 2650. Ne? After 2650, 2700. That's how we're going to approach it. Does it bring about any clarity?
Okay, so you're saying the retesting will go to
If we break
25?
if we break 2600,
Yeah.
you need to observe role reversal at 2600. Are you following?
Okay.
Because remember, yesterday we got to 2600. That was significant resistance. We've seen the market violate at that point, okay? But we didn't get to 2530. Why were we interested in 2530? It was a key level of resistance turn support. We need to do role reversal there.
Yeah.
But we're not gonna,
Yeah.
we're not gonna sit and wait and say, oh, I hope. No, we might not get you. And that's fine. But if you violate now what is the newly created resistance, the new high, we violate that one and close above it, we'll approach it the same way. Where's my pen? Let me just try and find my pen. Okay, right? We violate it, we expect the market to come back down to it because it's currently resistance, but once we close above it, it's no longer resistance. Now we expect role reversal here, then we'll go and target 2650. Make sense?
Okay. I think I didn't take 26 as a resistance because I don't know. Is that not a wig? That touched 26. It still is resistance. You say it's still a resistance.
I don't understand. Are you talking about this wick here? Let me just, why is this thing saying my internet is, are you talking about this candlestick here?
Okay, let's see.
Is that what you're looking at? How do we determine resistance? It's where price gets rejected. That's resistance.
Yeah.
So that's what I've marked out, right? That's where we turned. And even if price didn't, even if, as you can see, we haven't been to 2620, we haven't been to 2630, 40, 50. Those are round numbers. Some will be eating that, elephant piece by piece, saying for scalpers, above 2600, I'm targeting 2610 or 2620 or 2630, whatever informs that, that take profit level. But for some of us who like to target a much wider range, 2650 for me is a level that I'm interested in. We're above that. We're looking at 2700. Now, doesn't always have to, you don't have to take, or rather, how can I put it? You don't have to go about it the way I do. There's many methods to the same sum, but psychological price points will always be psychological price points, right? It's not only we don't only take these rounded off numbers as psychological levels, but also psychological levels could be where there has previously been a significant event take place at that price point. You follow? Historically, something has happened at that price. And so therefore, when we get there, psychologically, the market will react in a very similar fashion. For example, USD JPY. Okay, I'll explain in another session. JPY with the Bank of Japan, we have, hey guys, am I recording? Yeah. The Bank of Japan, time and again, they'll do, and it's not only unique to the Bank of Japan, but other central banks do it. It's called currency intervention. This is where they come in and actually, I would say, they make you aware anyway, but they openly manipulate the value of their currency against the dollar. Now, it's not a lot, doesn't always have a long-lasting effect. And that's not the intention, it's just to slow down the exchange rate. Okay. China does it. And if you remember when when Trump was president, he initiated what we call the Trump the what did they call it? Shucks, my brain. Let me just think. It's called the trade war. Remember that? Have you heard of that? The trade war. No, it's not. It wasn't guns blazing, you know, and bombs being thrown at each other. No, this was a rather different fight. You know, a war rather. This is, you know, two countries, you know, imposing tariffs on each other's imports and exports, and saying, you know, okay, you don't want to take this from us at this price. We're not gonna take this from you at this price. We're gonna hike, you know, those imports tariffs so that, you know, we have less of your stuff coming into our country because you don't want to take more of this, and you are manipulating your currency. So China, Japan, you know, they're quite guilty of that. They're one of the largest exporters, especially China. And so, of course, you know, if you keep your the value of your currency low against, you know, other major currencies or countries, it favors it favors you in terms of exports, because for other countries who have a much stronger currency against yours, that means they got to buy your goods cheaper. Does that make sense? So currency intervention is something that the Bank of Japan does. They did it a couple of times this year at significant price points. I think one was 150. Let's quickly check. They do give you what we call forward guidance. What forward guidance is when the bank comes in and tells you, listen, we're concerned about the value of our currency depreciating at a rapid pace. They're not concerned about the depreciation of their currency. They are concerned about the depreciation rate. And so this is where they will come in and intervene. They've got traders all over the world, right? They will get a message and they will be instructed exactly what to do on the open market. They'll tell them exactly dump X amount of dollars in billions at a particular time from this time to that time. And that's what happens in the market. So you'll see here exactly 160, 162. They did currency intervention. And they did it before as well. They did it also here, where you see the market lose a sense of, I would say, structure, right? And they've done it before. At what price point? Was it 150? Can't quite remember, but that's something that they do. So now when we get to those particular price points where certain events have taken place, we tend to become risk averse when we get to those price points. Does that make sense? Let me just get Raymond in. TXY. So that is also what psychological price points are. It's rounded off numbers, but it's also key to certain events that have taken place at a particular price point. Okay, so in this instance with gold, 2,600, it's a key level. It's a rounded up number, 2,600. From there onwards, 2,650, 2,700. Okay, but you can do it in, you can determine also in a very smart way. Let me show you. I'm just trying to get everybody in. Just give me a sec. Zone to zone. Does anybody know what zone to zone is?
No, don't.
Maybe no. You're the one who's supposed to know. Hey, Kahana. Hey.
Aye,
Huh? No
aye.
ways.
No.
Okay. All
No
right.
idea.
Impossible. 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 Hey. Okay. Anybody give me ooh, excuse me. Give me any trade, any pair. Any pair. Any currency pair. Just shout it out and I'll show you what zone to zone is. Come today would be great. Don't worry, it's the last day of, well, not of, you know, the curriculum, but for sessions. So you guys don't have energy today, so I won't hold you for too long. Give me a currency pair. Give me a currency pair. No one. How many of us are here? Nobody's even responding. Let's see. Or is it my network? Testing 1 2 1 2.